Good afternoon, everyone. Hey guys, this is Bruce Marshall with Simpler Trading doing the nightly market update for Wednesday, March the 8th. So happy Wednesday, happy hump day. Hope your trading is going well. Another exciting day here. I've got the ES up on the chart here, and this is the NASDAQ, and this is the Russell 2000, along with our tick chart and multi-time frame chart here. But today we had the second day of testimony from Powell. Today was the House testimony, I think it was. Yesterday was the Senate. Yeah, today was the House, and then we had ADP employment and beige book and some other things. But we had more of the same of this, back and forth, straight up, straight down, straight up, straight down. And then here it looked like we were going to, we're down for the count. And I actually had a level there at 3971.89. And we got to 0.5 and turned and never really looked back. Big run into the close here. I guess that was short covering. I haven't really seen anything else, any other reason for that. But this market continues to be pretty I don't know, treacherous, maybe that's the right word. It's actually I don't want to say it's easy to make money in this market. Well, I can say that it's easy to make money in this market, but it's also easy to be wrong very, very quickly, because the turns, you can be right for 20 minutes and then have a galloping run away from you, up or down, that kind of thing. So this is really turning into a kind of like a day trader market, a scalping market, that kind of thing. Get in, get a quick profit, and get out. That's really what's been working, and you can make money that way. It's been pretty good. This has been like this for a while. I've been doing this type trading, which is not normally my type of trading, but I've been doing this for the last year probably, and came out making a very good year last year, and so far up nicely for this year as well. But it's not easy, right? And it takes a little more work and a little more dedication, that kind of stuff. But it is, it can absolutely be done. So let's look at the S&P here, and I'll give you kind of some thoughts on where I think we're going. The biggest thing that's going on right now, of course, is what's going on with the Fed, what's going on with inflation, and all that kind of stuff. And what the Fed's going to do about interest rates, or interest rates going to keep going up or not, and obviously they are. We were kind of so-so in the last handful of data points that have come out over the last several months about inflation, seeming to tick down a little bit, but the economy is not really slowing down, and that's what the Fed's trying to accomplish, is to kind of slow down the economy. But it's a double-edged sword, because when they slow down the economy, they'll slow down the housing market. People get laid off, that kind of thing. Interest rates going higher. People are not buying houses as much and building and all that kind of stuff. So it's it can be a downward spiral. That's where they're trying to make a soft landing out of this, and I don't know that that's really even going to be possible now. We'll see. And what we need to keep our eye on are the data points that are coming up in the next week or two. First one is payrolls on this Friday on the 10th. Today's 8th. On the 10th, non-farm payrolls come in, because that's the employment report, and the Fed wants to see if employment is ticking up or ticking down. And we'll see. That could be a big market moving event on Friday, so be careful if you have any trades on, because again, that could be a pretty good market moving event. Then we come in the next week, and on Tuesday the 14th, we've got CPI, which is the major inflation barometer to watch for, and the Fed will be watching as well, to see if inflation is ticking up or ticking down. Then on the 15th, on next Wednesday, we have PPI, and we also have retail sales. Big days coming up here with all kind of data points that the Fed's going to be watching. And then 1 week later, 2 weeks from today, on the 22nd, we have the Fed meeting, where they'll give commentary and all that kind of stuff and tell what they're going to do. Now, they had been saying the market had been pricing in, and I don't have the exact numbers in front of me, but I think it was about a 70% chance of a 25 basis point rate hike, and now that's shifted to a 50 basis point, more probability of a 50 basis point rate hike, which makes sense. So because in Powell's testimony, he said that he's willing to do more rate hikes for longer to get this thing under control and all that kind of stuff. It was kind of even, basically said that they don't have it under control and they're going to do whatever they can, to get it under control, which that in itself is kind of scary. But it is what it is, right? So, again, we got to be careful trading this. So let's look at that, how it relates to the market. And if we go back here on a 10-day chart, if you were listening to my videos from a couple of weeks ago, I have to tell you, go back and watch. I said to get long right here. This thing's bottomed out. I actually had a level, where was it? I think it was here, the snow line. We did go past that, but I had another level down here, 39.25. And I said this thing is overdone on the downside. It's going to bounce, and we got a really, really nice bounce out of this thing. And then we immediately, started to fail, just like we've been doing. Like, see this? I mean, straight down, straight up, straight down, straight up. It's kind of, mind-boggling, these amount of these moves we've been getting. If we go back out here to 20-day chart, you can kind of see. Let me clean this up a little bit. I'm going to switch voodoo lines here, right there, and these are a little bit longer term time frame lines. And as you can see, we're up here at almost 4,200, and then all the way down, and then coming back up. And I thought, and I still think we have a pretty good chance of getting back up here, tag that fire line at 4,100, possibly go up here to 4,200. I got a couple of marks up there, looking out for that. And let me go out here in a little bit longer time frame, and I'll show you why this is all important. If we look, obviously this is a 1-year chart. The trend's just been down. Every time we bounce, lower lows, lower highs, all that kind of stuff. And I thought it might have turned here, and we got rejected at that, at this level, prior level here, about basically 4,200. This is ES. So at this point, are we going to come back up here? I would like to see us come back up here, hit this again. I would short it, and because I think we're going this way ultimately. Now, what happens in the meantime between here and here, I don't know. Maybe we come down and then go up and then come down. I don't know, but I think we have a decent chance to go up and then down. A lot's gonna, well, not a lot, almost all of it's gonna depend on what happens in the next week or two. So that's why it's so important to keep an eye on all that stuff. Again, this does not bode well for the economy. It does not bode well for the stock market and all that kind of stuff with more aggressive rate hikes than we've had previously. We have an inverted yield curve now, which is not good for the stock market. So, take all that into account. Again, it does not mean you can't make money, because we are making money in the market. And, it's just a kind of a different way of trading. But the buy and hold, and buy the dip's not working. Buy and hold is not really working. Maybe on selected stocks here and there it does, but overall it's not been working. So bottom line, you got to be careful out there. Don't step on landmines, and really watch your risk. Manage your trades more than you have in the past. And maybe think more about day trading type things within reason, and I would say week trading. Trade put a trade on Monday that expires on that Friday. 4 or 5 days later, that kind of thing. That's working as well. And I'm not trading like every 30 minutes of the day. I make a trade, for the day perhaps, or for a day or two out, or 3 or 4 days out. But normally I'm trading 30, 45, 60, 90 days out, and that's just not what's working now. So anyway, if you want to see all this in action, come join me in the main room at Simpler Trading, or the bias room, which I run as well. And we do these, we do this every day. So hope it helps. Hope it makes sense. Let us know if we can help. And above all, just limit your risk. Be careful. Use tight stops. If something's not working, get out. And if you get a quick profit, get out as well. So hope that helps. Hope it makes sense. And I will see you guys at the next update. Thanks. Take care.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me